Okay, I think I'm looking at 22 instruments here. About 20 currency pairs, and I got gold, and I got the Dow Jones in here. And I'm using the 20 period exponential moving average that I guess that's considered to be industry standard. And just from looking at that's the yellow line there, and I zoomed out, max zoom out on the weekly, so I'm looking at the broad view of these markets. And I guess this is a nice major trend global overview of the market. And here it's no no-brainer, uptrend, downtrend, right? You can see all the trends here, obviously. And when the market goes kind of choppy sideways, here I duplicated that currency. I guess that's what it's good for, right? You can see that you just duplicated that one. And this one's choppy sideways, right? This one is starting to go up. But I don't think it means that you could jump on the short, for instance, the euro to the pound. You couldn't just like say, let's just start selling this thing, because what if that's the end of that move, just like this was, right? So I don't know in the end how to, well, I do know how to use one of these moving averages because I was taught how to use one, but it is distracting because it's not a perfect fit. And if it works, it should work on any market. I don't think it's fair to say that well, this is a good entry here, right? Because you come back to if you treat it as you only take trades when you pierce or you're right around this area here, but it still doesn't get you around the problem of how to get in without getting stopped out. I put a 50 pip grid in here, and for instance here, of course this is weekly, you've got all week to get in that trade. But even if you sold here, if you weren't careful where you put your stop, you got stopped out, and that's of course why you'd want to always trade more than one ticket. Why you'd want to split your ticket, and even people who buy lottery tickets don't buy one ticket a year. So even those people, they're aware of the fact that you got to have a bunch of tickets, and you just take your 10K or whatever you're trading, your 100K, split it into 10 10Ks, and just go at it, right? Same thing when you're making cookies, right? I mean, you're going to baker's dozens like that because, yeah, you're going to drop one on the floor. So I don't see anybody scaling yet. I just went another search on YouTube, and I don't see anybody talking about scaling into the market. I mean scaling as far as this is going to be the scalp, this is going to be the swing trade, and this is going to be the long term. I'm going to hold that trade through the whole move. So this is the weekly euro to the pound. Say you scalp this psychotic situation up here, and so you got in here, right? The trend's down, kind of faint. Oh, here's a better example, right? The trend's down. Well, how'd you get in that thing? And this is why I decided that I would never use the moving average again, is because I'm looking at this low here as my entry. Yeah, I'm gonna use white here on this. So, in other words, if this top became a bottom, that would be my entry there for that trade. It has a contradiction with this, right? This is a filter. In other words, if you had a say you had an application, right, for your business, you want to filter out. Like if there was a box to check for sociopath, and every time you saw that box checked, you'd move on to the next applicant, right? And I guess that's what's happening with the moving average. Problem is that what if the applicant is just, okay, they're a genius. Maybe you can work with them while they're in jail or something. I guess you can add it to your decision process and say, well, this bottom became a top, and therefore I've got the moving average in my favor. but I haven't, if this was true, that you could just use a 20-period moving average without any other inputs, then you would just build a robot like that. You'd turn it on, you walk away, you'd apply it to 20 currency pairs, and you make a pile of money, right? But that's not the case, sadly, because somebody would have done that already, right? Obviously, you would have wished you had a 10-period moving average here to capture that move, right? And then you would have wished that, and would have wished that, and you would have... But all the trades you're missing out on because you're not using multiple strategies of just the way the market's really behaving, like this double bottom here. Some people are double bottom traders. They trade these things. Well, they're counter trend trading against this supposed wonderful moving average. That's so you're missing out. And well, here, but I can always show you, and it's like backtesting. I can always show you how it worked out so great, right? Yeah, but look at this. How do you explain that? Well, I would say what is way better than any moving average is this line, because I can go to any chart, I can find a double bottom, I can attach that, and I can see, okay, well, here's the wedge. And so I'm a bigger fan of this situation, of using these patterns, right? And that's why I'm using a 1-period moving average, because I can see that. And this is just stuff I found on the internet. Just did a search for I think trading patterns, and typically this is the frustrations. If you're a trend trader, you're buying this, maybe you're buying a breakout of this. And here's another issue. People that talk about getting on these trades, I still have yet to find somebody that really shows you how to get in these things properly or to maximize. Most of the stuff is something you could hire a robot to do, so why not just hire a robot to do it, right? Like this, for instance, this situation here. You looking at this triple top, right? Do you put a buy stop here? I don't know. Let's look at a real market condition here. For instance, if you were to put a sell stop right there, is that a good idea? I don't think so. Maybe it is for one of your tickets, but how about a sell limit up here for the market maker hunt? And I'm on a weekly chart. It doesn't matter what time frame. This stuff happens all day long at every time frame. In fact, the constant revisiting of this top and sell limits, right? Maybe your stop's up here. Maybe you don't have a stop. These are 50 pip. This is 50 pips every thing here. Here's a bottom. You have a buy limit there. You got a 50 pip stop. You didn't get stopped out. You made 150 pips, right? In total contradiction to the down sloping 20 period EMA. So that's why, to me, it's pointless, it's ridiculous, it's distracting. It is taking you away from what's really happening. I mean, in essence, it's a way to try to make the market fit in your volatility box when the market really has no clue of a 20 EMA. It has no respect for a 20 EMA. This idea that the market's respecting something. I could go through every chart on here in an instance. Just go, here's a double bottom. That's crazy. Wow, that looks like a pivot. And so, but it's really, how do you get into these things, right? How do you get into this trade? Of course, here, when it's getting quiet like this is almost the only time you could ever even think about using a breakout strategy, you know, in my opinion, because if it's quiet like this and you have trailing buy stops here, okay, you got filled there, and you also have sell stops there, but when it breaks this bottom, wow. And you know this big hole's filling, this big void is forming under here. So it just cuts through, and this is the weekly chart, so you'd have chances to get on here, but look how the 20 EMA is just completely worthless to you. In other words, if you were to say, well, it's pointing down, I'm going to sell here on a breakout. Okay, but wow, look at that. Isn't it better to think in terms of like here? Okay, this is going down, right? Where are you going to get short? Well, why not get short where they're going to stop everybody out? The guy that sold here, he put a stop here, right? Then he started tightening it up. Then they stopped him out, and then it really went down. So if you're using a limit entry as opposed to using a and here's another one. Okay, I'm just saying that okay, I'm just going to go through every one of these currency pairs on the weekly. Now here's a flat line situation. Here's the yen. Okay, now this is the one everybody talks about. The yen's going up, blah blah blah. And this is actually one of the entries that would have just perfectly queued up with the 20 EMA just by happen chance, because the market just happened to get into the volatility window and the cadence of this 20 EMA. So you got this beautiful entry here, and this is 50 pips on this. So if you drill down to this yen and look at this, but you always have to wonder if you're gonna how much percentage of your decision is gonna weigh in this 20 EMA. What does it fit into your trade plan, and what does it mean to you if you ignore it and then you say, oh, you know, I should have stayed with my original. Now, I used to think, well, maybe I should tighten up that moving average so I can take advantage of this wick here, this trade, right? If this would have been a 15-period moving average, it would have come up here like this, and it would have looked like, wow, I could have just captured these trades. But then it's going to get whipsawed, and it's going to come down like this, and it's going to try to track this, and then you could say, well, I'm using a moving average crossover system, so as long as this moving average is above that moving average, I'm long. Okay, but you still have to have an exit. Like even if you bought this breakout here, they filled you, right? You would have had to scalp something for money management. It came back. You actually had another chance to get in. That's why it's so not like the real world. That is the one thing about trading. It's not like anything else in your life. The rules don't apply for the rules that do apply is that you'd have to treat it like more like a martial art, right? More like you can't take it personally if you go to the dojo and somebody beats the hell out of you. I had this one guy one day, I went and joined this because everybody said, oh, you got to try this martial art. No, this is the best. It's just almost like trading things. So I joined this one martial art studio where we actually were working out on rice mats, right, trying to keep it real. These bogo mats, I think they call them bogo mats or something, but they were filled with rice, and they were like 2 feet by 4 feet, and they're laid all over the floor, right? Well, you go to this, it's Kwai Kan karate. And I'm telling you what, these people were so hardcore, they would do 100 jumping jacks, right? And the room has no air conditioning. And some people, you know, they can't hang, but you have a group mob mentality, and people will actually, you could push yourself beyond any limit you could imagine, because, you know, when people around you are doing it, there's like a momentum just in like, oh, well, everybody else is still alive and they haven't keeled over, so I'm going to just keep doing my 100 jumping jacks. And then And then we also did this thing where you come to punch the bag for 30 seconds, which is the longest 30 seconds in your world, in your life, because you realize that you ran out of techniques after the first 3 punches. It only took you 3 seconds. So you're like, okay. And then the instructor's going, well, use your left side. So yeah, use your left side because that's your bad side. You always want to work. So if you're not somebody that sells the market like me, I have to work on selling the market because I'm just so bad at it. So I'm always working on, okay, how can I short this thing and get into the shorts of it, so I trade both directions and be kind of non-biased and just be bi-directional trader. And so the thing is, you're punching this bag, and of course I had a guy in front of me who was so hardcore he wanted to be a black belt, and this guy punched the bag so fiercely he went outside and threw up. So I went outside with him while he was throwing up, and I said, maybe you're just a little too hardcore. Maybe you should just, but the dedication that some people will apply to something, right? But the real point of the story is that I was fighting one day with a guy that had one arm, right? So he's coming after me, and I'm like, I kind of was like, maybe I should go easy on this guy. Not that I'm a bruiser, but I'm only weigh 160 pounds, but I thought, guy's got one arm. The guy beat the hell out of me, right? He knocks me out. I've never been knocked out before. And so I'm unconscious, and the instructor's saying, get up, and I'm like, fuck you. Like, I am knocked out. Besides, and so then I had this one-armed guy said, how dare you? How dare you, make me feel like you don't, like I should go easy on you with one arm. Of course, his one arm was as strong as 2 arms because apparently all the blood that he was using for his missing arm is now in his good arm, and he's just kicking my ass. And actually, it seemed to be almost like a advantage for him because I couldn't grab his other arm and throw him down. He didn't have it, right? He had one arm. It's like he was coming at me with a sword mounted to his body. So less is more. My point. If you're just sitting there with if you've only got one trick in your book and it's like, I buy double bottoms. Now, how do you get in these things tactically without getting blown up? Now, here's an example here of how not to trade a pattern. Now, I see this all the time. Everybody's doing this. And why are they doing this? I don't get it. I think it's some kind of confirmation bullshit. And it's just like the worst thing in the world, right? And I just watched a video of guys. This is ascending triangle pattern. Seen this a million times. Rising support level, like duh. Now this guy's getting in here, and this is a typical situation. Get in here in a breakout. Should you have been long down here in the apex? Shouldn't you have bought this baby top that became the bottom here? I mean, how are you? In this scenario here, we don't even see the typical pullback to the breakout, so we could have still got in down here. I'm sorry, his buy breakout is right at this level, but still, that's not helping, right? Because he's going to get in. Okay, so here's he's going to make his first profit, right? But there are people. I've seen them buy here. They're like, well, I got a bullish candle. That's my signal. I'm going long. I'm like, oh my God, you've already exposed yourself. And of course, this time frame here could be the daily. And of course, you'd want to drop down to the 4-hour, the hourly for entry. But in the end, don't you really, of course, we don't see wicks here, but in the end, don't you want to get in down here? Like, get out here. In other words, scalp this. One of the best days I ever had trading the British pound is, it was about, Europe had been open for a few hours. It was about 6 o'clock in the morning Eastern Standard Time, and I noticed the British pound just going up and down. So I just kept scalping the up and down, up and down. I knew it was going to actually go way up. It was obvious to me that we were going to go crazy up. Well, we finally did. But all this stuff here, the accumulation phase, I wanted to trade that. That to me is the thing. Of course, I can draw a trend line through this top here to here, and I can start to get areas I want to get in. Of course, now a scalper, if you're scalping it, you're making all that money, and you don't really much care about like this big explosion because you've made so much money during this phase that you don't really care. And that's this phase here, right? So this is the if you did buy this breakout here, well, you came back and retested, right? So here was the retest of this. Here's the breakout. Here's the retest, right? And it just so happens that your 20 EMA is just pure genius at this point, but it's too big. It's too big a filter, and of course, experimenting with many degrees of moving average and drilling down to say, okay, look at this thing. If you're short this thing all year long, you're loving it, but at this phase here, you're not so much loving it because you're just treading water here. You're just treading water. I could see, this trend line here, and then bam, right? Now we're treading water again. So the range traders are making all the money here. All the money is range trader money. 20% of the market is a trend. The rest is all. So, and that's another thing about the 20 EMA is it's a trend thing. Let's go to the Dow Jones. Right. Wonderful, but what about this? That's a problem. Here's the famed Eurodollar. I could say, well, look at that EMA starting to turn up. Think about getting bullish. Yeah, but wow, what about the bottom down there? So you totally miss out on all that. Here, it's a perfect world, right? So here, this is the argument. Now, this is when people will release their so you built a 20 EMA robot, and it picked up this buy, it picked up that buy. I mean, this thing is chunking money. It sold that. Really didn't get a fill on this. It sold that. Okay, now here's where the robot's just going to destroy the whole account. And if you're going to play Alexander Elder entry, which he does a 13 EMA, and he's got a tired EMA, so he's actually selling as it comes back in and darts into the zone there. Of course, he's going to get more whipsawed. So there's no perfect there's no holy grail as far as indicators go. And here's the one that people are talking about now is the dollar Canadian, which according to this it's an uptrend. And here was the ultimate entry on the 20 EMA. So you bagged a bunch of pips there. But don't you want to be selling these double tops, these failure swings? I do. I want to trade it all. I want to maximize all the trading I can get out of these things. So if I'm selling this top here, it has nothing to do with this EMA. The only entries that would have been good would have been here if you're going to touch the EMA before we go up. This one here, the EMA was in your favorite. It didn't come and fit that criteria, but you had the double top, became the double bottom. And it also doesn't tell you where to get the hell out. And I'm sure you're getting divergence here and selling this top here. So there's no panacea, I think they call it. The one panacea that I see is what the market makers are doing. When you get a momentary move that doesn't last very long, to me that's a fake move. Like this here. This wick, here's the top. Look at these two entries on limits. Even makes sense with your up moving average. It's how you get in these markets. My point of this whole video is how do you get in? And I was at a seminar once with a really good trader, and I said, and then one of the guys said, we both said, how do you get in? And he's like, okay, now I could put a buy stop here, and I could get in, I would say retail style. What would you hear most people say? But look at your risk, right? You're risking all the way to here or something. But what if you change the situation down to getting in at the what if you get in like this? Here's your top, and you have a a buy. In other words, after we have to wait for this to go up, right? So you're going to get back in at that structure support, right? On a limit or at the market. And when the market, even on these, see these quick moves, right? In other words, this is, what's really going on is this. There's a triple top here, right? Yeah, let me do that again. So anywhere in this chart, doesn't matter, it works anywhere, right? Here, right? Here's your top. You know that exists. Market goes up. If you think it left you behind, I don't have it open down here, but it came all the way back. This is actually the close, so you could still get in these things, right? And the guys that got in stops, that got in there, you want to sell this bottom. You got a sell stop there, and you got to sell limit as it comes back up in there, right? If you're getting in at the market on stops, on limits, and you got different entry techniques. So here's an example. Here's a top. Everybody knows that's the top. This is going to be your entry. You're either going to get in a buy stop. So you got a buy stop here. You got filled. But the problem is they ripped it back and they stopped you out. So why not look at these tops and think about getting in on pullback limits, this top, limit entry, right? And you've even got this 20 EMA telling you you're in an uptrend. Here's a perfect entry for the 20 EMA. Yeah. So it does, but just like anything else, I could put up a 50 EMA, and there was a guy once on FX Street that used a 200 EMA. I don't know where he found the patience for a 200 period. Maybe it's a simple moving average, as if it would make a difference at 200 periods, right? Works good on a 5-minute chart, though. But these are all weeklies, and I'm not trying to give a trade recommendation. I love that disclaimer people put. Oh, this is not a trade. Duh. Okay, here's a beautiful setup on the 20 EMA. Look at this thing, paid money. But another example of, did you really need that? I mean, when you have this double bottom here, and it becomes a top on those wicks, I don't know if you really, I mean, I guess it's okay to throw it in there, but the market has no respect for a 20 EMA. It doesn't even know it exists. I'm just saying, right? Think about it. I mean, you think the market's looking at over its shoulder going, well, you know what? We are coming up with a 20 EMA. How about we do this? Because if that was true, then how do you explain this situation over here, right? How do we explain that? Well, I could say, look at, I got filled on my sell there. I got my filled on my sell here. Also doesn't give you a profit target, where if you did sell that, see that baby bottom that became the top, I took that trade, where and I guess you could say, well, you took that trade if your rule system was touch the EMA to get in. You could say, I'm in a downtrend, I can take that trade, right? When you're in an uptrend, you could have taken this trade, but you wouldn't take this sell up in here necessarily. But I just think that this is a better way to go. A nice hard edge. You get this beautiful breaks on close, comes down, and this is This is just two. Okay, so this is sideways here, so maybe you wouldn't take any trades here, but this is a good buy, and you've actually got the EMA turning down on you, and this is the weekly. Of course, you could change time frames and all that, but I'm just trying to keep a strict. Here's a nice entry, and just nick that thing. But it's really about what type of order you're going to use, I think. And even here, when the market went flying through the floor here, there's an instance here where I'm sure everybody was like, whoa. Now you have a bottom here. And this is the counter trend trade, of course, that you're buying this for a ride up into this, which used to be this support area. But look at this open here, or look at these trying to get near this 20 EMA, but on a daily chart you probably got some more zigzags on close there to get in. I'd definitely be buying this thing down here, right? But how to get in this New Zealand, and of course the other thing I think I saw somebody do was they were going to short the this Kicklighter guy. He's going to short this thing, right? Because there's a bunch of space below, he said, or something. Like, look at how much space below. I'm not sure that really means anything. If you're on the daily, you're like, okay, well, we got a bottom here. I want to buy the retest here, or I want to place a pending order down here if they're going to stop these guys out before we go up. And they would say, well, you don't want to be buying this thing. Look at the 20 EMAs pointing down, and look how it just nailed this entry here. Of course, this is probably the one time where this top became a bottom, the EMA's pointing up. Great trade, right? But it's a lot of reliance on when it goes flat like this. Now what? I don't know. I just moved away from the moving averages. I know people use them and all that jazz, but I'm just saying that in the end, it's really how do you get in these things to ride them? How is the what's the best approach there? And it also may contradict some of these wonderful like the trend line gives you more of a target into the future. I know you can make this offset and maybe paint this. That's why everybody's doing this cloud trading, is because it's painting this moving average out into the future of space. And that's the only thing I could give the cloud traders, is that, okay, what they've done is they've just said, okay, well, here's the downtrend. Another thing you can do, actually, these moving averages, there is a nice trick where you can draw, if you tighten up this moving average, you can draw your trend lines on the moving averages. And that's a nice thing there, right? Because you can, when you zoom out enough levels, you can draw a trend line on the moving average. I forgot that's another trick. The trick of the trade there. So you're drawing the moving average there. You're drawing the trend line on the moving average, and when you break that, wow, right? That's not only the price is already about to leave the station. You're definitely getting, like, so here you've got a two wave. You got one pullback, then it breaks, and here would be the trend line to break, right? You're drawing your trend line on the moving average. But yeah, the entry, that's the thing. So drill down there. Okay, that's the daily. And I do think the stock market. Okay, and here's the gold market, right? So the gold market's in a downtrend, according to the EMA 20. And Anyways, wow. I mean, it's just, I guess it's just distracting, you know. I just thought, well, it's probably better to just go with the adaptive moving average, which to me, that's what the trend line is. And then here's the British pound. Crazy, just crazy. This, according to the 20 EMA, you would have bought here. And not like we can't retest that. You go to daily, and here's a nice entry here in 20 EMA. But it doesn't help you on these sells here. It doesn't help you the counter trend trade, right? It's a trend trade here. If you sold here, because it's pointing down, like you're selling here, right? So here's a prime example of, you would have went short the British pound on the daily, but if you went to the weekly, you'd say, well, but that's in an uptrend. And so that's another thing is, well, what's the best time frame, right? Well, here's the 4 hour. Here's an entry in the 20 EMA in the 4 hour. Beautiful entry, right? Takes out this low. Even the stop entry guys, right? You made 50 pips, right? But isn't it funny how they marched it up and tagged this again? You could have still made 50 pips. I think that's the prime example right there. Now that's a classic. Now this is the 4 hour example, and of course I'm on the 4 hour at least, because I don't have the patience for any other. 4 hour to me is like forever taking. But here's a prime example that if you sold on a stop here and you made this much money, if you tightened up your stop, you made it to here. But look how they revisited that. So you could have still had a limit here, you could have a limit here, and you could have still banked the same 50 pips here that you banked on this thing that you waited forever, and you had the of course this looks like the better entry is to put your sell limit here where they're going to do the stop hunt, and it actually coincides with the 20 EMA, so you can make that argument. Here is a flat line with an entry, and here is the wick on the 4 hour coming up into the 20 EMA, right? That's your entry there, but then you're kind of wishing you had a 10 period moving average here. I guess you could have the old sell stop here, you break that out, but you know, after they fill you and they're just gonna, so you're trying to get that, you don't want to get stopped out. That's why I say you probably use multiple orders, right, and all that jazz. And but that's just one example here. Now what do you do here? I guess some people are waiting for it to come back to this top, or they're waiting for it to come back to their floating moving average here. So you're waiting for it to come back into that, and that may be a wait you can't endure. And then some people would use, say, as soon as you start to enter maybe a 10 period moving average, it's like, oh boy, now which one do I look at? So you want to, if I'm just saying, streamline your, take yourself down to just one setup entry. One entry is set up, and here's the famed Swiss franc going nuts on the market. Of course, here was another wonderful entry on the 20 EMA. So it all looks wonderful and good, but there's another way to approach it that's just more dynamic and simple. And I think that's just the fact that you would take the effort to put in the identify these tops and bottoms here. So this double bottom here, you could have a buy limit there, and you could say, well, I got confirmation or added stuff from that. But it doesn't, it makes it more difficult, in my opinion, to think on your feet, or just go with what's happening right in front of you. So, you know, like I say, you're in the dojo, and you're fighting, you're practice fighting, And if you go back and practice fight on these charts, so you're looking at all these moves, and somebody just stole my car. You're practicing, you know, you're back testing, I guess, so to speak, right? And the better way to back test is open strategy tester, run this 20 EMA, and ask yourself, would you take that trade? And that's another way to approach it, right? So if I go to the strategy tester here, and I put up this template, and this is another tool, and I'm not using it to back test the market. I think, where's the strategy tester in here? I haven't used it quite a bit. I think it's view. Isn't that weird? Don't you think it'd be a tool? Okay, I want to view the strategy tester, and then I load this up. I don't know if I got this thing ready to go. Okay, so I'm at 1 hour euro, and I don't even know what the time frame is here. 2008, so it's a market crash. And I would just say, okay, start. It's going to go grab the data here. And I would just run it on here. So strategy tester, see if my, and that would just place the template in here. And my template is called 20E. Okay, would you take that trade, right? That was the 1 hour chart, right? Would you take that trade based on your 20 EMA? I wouldn't. I'd put a buy limit here. Of course, maybe that's too squirrely, but hey, it worked out good here, right? So I prefer to get in where the like if this was the top that became a bottom on that breakout, that's where I want to get in. Because if I just bought right here blindly at a poke through there, it just may not work out, right? Let's see if I can speed this up one level without going through the chart too fast. Okay, here we go. So I'm gonna get her done mode. Okay, it turned out to be a great trade, right? But where was my stop on that? I don't have a grid here. Okay, here was another buy. Here was another buy. There's a buy. Okay, I'm getting hurt a little bit, maybe, right? I just got my clock cleaned on that. So wasn't the better entry to get in here? Get in here on the limit. And, oh, but if I would have widened my stop, look at how right I was, right? Here's a good entry. For that, I would have had to get the hell out of that. You know, if I was on the daily chart, I don't know how fast this would pan on the daily. Here, let me change the time frame. Let me go to 4 hour chart, right? Or let me see, I don't know the daily. I've never actually tracked the daily. I'm usually thinking in terms of scalping. Let me see if I don't go too fast of a playback here. I don't want to blow through 3 years and 20 seconds. It's funny, it's going to use the 4 hour, it's going to use all these same data points, I guess. Anyways, I'm not saying that 20 EMA doesn't work. It does work, but it's a filter. It'd just be like if you decided to put, get tinted glasses, right? And, let me slow that down a little bit. If you went with tinted glasses, we should be through. This is the big sell-off in 2008. I think I'm starting here. Okay, so here's my template, and let me speed it up a little bit there. So I should be selling the market here. I would have taken all those sells there, and so yeah, you're short the euro dollar here, right? Anyways, if you want to back test this thing, I guess I really picked the wrong time frame. I have to go 4 hour. I screwed that up. As a 4 hour is going to be a little bit more, I think it's going to be less risky. But of course, you know, you could have MACD, stochastics, all that stuff. You could just load the wagon with every indicator in the world. And when I used to do that in the old days, I thought to myself, which one do I weight? Which one do I put the most importance on? And so here was your great sell, right? And here was the great buy in the 20 EMA, right? Came back to that, you got in. But you could have done the same thing with the trend line, right? Because you could have had the trend line like this, came back into that, and gee, you know, where the sellers are going to come in? Up in here? This is the sell. Okay, we're coming back to the 20 EMA. I'm going to buy right there. Alright, I picked that up. But couldn't I just have a buy limit here? Okay, so I just took some heat on that 20 EMA entry. Okay, now they're stopping me out. You know, presupposing I got somewhat tight stop on that. Now the 20 EMA is just a big mess, right? It's going sideways, it's getting choppy. But I still got a scalp down here to buy a ricochet off of this top. And if I had a buy limit here based on this peak, I would have had more confidence buying this double bottom, which the EMA is totally not showing me a double bottom. I'll be there in a minute. And look at this. Just look at this crush of that. So I'm just saying this is, and I'm not cherry picking. This is just, I'm just running the data, right? It was good here and it was good there, but the reliance on a 20 EMA, this is where you psychologically, if you're getting all punished on that, look how it came off of this better than it came off of that. You're getting punished, right? And you're just like, oh, you know, I'm just so frustrated with what's going on here. Oh, damn, you know, look at this. I was right off of that. I just think these pivots here are just so much better. I can make the argument all day long, and I could show you if I built a 20 period EMA, and I built that thing so that, and I just picked the right data stream, it would look like the holy grail of trading, especially if I had some more than just single tickets built in, like I really loaded up when, in other words, the steeper this EMA, the bigger the EA trades as it comes up in here. It really loads the wagon on a high probability one. Like here it looks great, like it's like coming up, getting support there, right? But when we went long here, where was the exit? The exit was probably this peak here, because this peak became the pivot. And that's why I switched to the 1 period moving average, because it gives me this touch, the head, the shoulder, this double top, and it puts me in a tighter range. And that plus the technique. If it's going to be a sell limit up in this guy, sell limits up there, if it's going to be a sell stop, you're just going to get chopped to death. Because if you put a sell stop, you're going to get trapped. You're typically going to get trapped into a trade, unless you're going to scalp the first price pulse out of that, right? So this here, if you got in a stop entry here, yeah, you made money, but you had to get the hell out, because that may not last. That may just be a momentary pause in a bigger downtrend, and we're just going to go down to China, right? I'd much prefer to spend the time and manually draw a trend line like this and say, okay, we just broke that trend line. Look at, I'm going to get in on a limit here, right down here at support, and I'm ignoring this EMA at this point. Okay, it just got filled there for a scalp. We could punch through that. If I get stopped out, I want to buy down here again. This is 20 EMA at this point is of no help to me, other than to really distract me from what's going on in the current thing. So they stop me out. I'm going to buy here because there is a stop sitting here. All right, they stop me out. Now you could say, well, you should have taken this trade here on the EMA. See? Yeah, but what about all these? In other words, it's like the psychic reader that, yeah, you know what? Yeah, that's right. I do know somebody whose name starts with a J. But look at, if you had bought here, you scalped to here, right? So you made money. You bought this wick and it went up to here and you made that. Now you got a double bottom. If you placed a buy limit at this bottom here, you're already long here for the scalp. Right? I can't see back. Okay, I can see back here. So we're flirting with this here, right? If we take out these wicks, yeah, maybe it plunges to hell. I think this is I don't even know what the date is on here. Okay, this is October of I don't even know what year. This is like 2008 or something. But EMA says I should sell that right there. And this triple bottom is contradicting that. So I want to buy its support down here. Oh, see, 20 EMA is wrong. So I could cherry pick these trades all day long and say, yeah, but see, I actually talked to this guy in Latvia or something. I don't know. He just started trading. He said, yeah, but see, and I'm like, yeah, but see. I mean, in other words, I could cherry pick this chart and I could prove a point and filter out all the bad parts of it, right? And I do think that structurally, this is always going to win. This coming in like this at support, where I can say, well, where's my exit? And my exit would be the last known thing here. Plus, I can do a geometric angle on this, where is the moving average is lagging, it's sluggish, it's trying to adapt, it's on the damn screen, and it's really annoying. And that's my point, that I don't like to see this wormy thing going through there. When you're a structured trader, you just don't care, right? Because you're concerned about this top becoming this bottom for this move here. And that's all you're worried about. Plus, you get the fun of, if you zoom out, you get the fun of drawing these giant trend lines like this going, holy mackerel. I guess you could draw the trend line. Like I said, you could draw the trend line on your moving average here. So you broke the trend line moving average. But it's just overly complicated. I don't know. And I hope my explanation is somewhat helpful. I'm just trying to think outside the box, I guess, of the conventional wisdom.